This is my first interview with Andrea Kennedy. She works in Washington, D.C. She has a she has different titles, so I will let her introduce herself in a few seconds. Andrea, it's a really pleasure to have you on my Crash Market channel. Thank you for accepting my invitation. And sorry for my very bad English.
It's a charming accent.
So, Andrea, I know that you are a very busy person. I will not take that long. I will only ask you some questions. First of all, tell us about yourself, your experience, your current job.
So basically, um, I offer family office services, types of services to people who don't have a family office themselves. So what does that mean? And it's mostly for self-directed investors. And it's mostly for people who I think are probably globally invested. They're not just living in one country, investing in just that country. So that means I do everything from financial planning to soundboarding, investment advice, to portfolio analysis, to helping people sometimes psychologically around their money decisions and their money issues they could be having at home, to kind of estate planning and will planning and helping access resources that people may not have at hand. So that's kind of what I do. And I charge, fees that are flat fee types of services. And I always act as a fiduciary. So and I've been doing this now for almost 15 years.
Thank you, Andrea, for your presentation. Currently, you live in Washington, D.C. What is your analysis of the US economy? Basically, the day-to-day inflation situation, purchasing power, gas prices?
So that's a huge question that I could spend an hour talking about. And so I'm just going to kind of bring it in and give you a kind of an overview. First, the US is an enormous market, right? And so where in one part of the country you can be having economic boom, kind of like we are having, home prices up, portfolios until recently doing very well. Other parts of the country have not had an economic boom for like 20 or 30 years. So when you look at averages, it's very misleading in the US, right? And so you can have a lot of areas where there's a lot of economic activity. In other areas, I can go 25 miles from here and not a lot is going on. So that is really what the US is like. And so, yes, gas prices are up and we do have inflation, but people are also getting raises, right? So we have inflation, but it's not affecting necessarily communities that are doing well. If your home price has gone up 20%, but you're paying a bit more for gas, it's not that big of a deal, right? It
Yes.
really hurts the part of the country that has always had problems. And this is really a lot of what I call the Rust Belt, where a lot of our manufacturing went to Mexico. And those communities probably have seen the light at the end of the tunnel, but they've got a long way to go. Okay, so I think in general, things are still going well. People are traveling, people are going out to dinner. There's a lot of people going out. So it doesn't feel like a recession yet. However, I think families, particularly if you're raising a couple of kids and you've just bought a home, you're not going out as much. You're definitely staying at home. You definitely have higher gas bills. So you're feeling that. And I think we haven't really felt or seen yet the cumulative effect of all of the higher commodity price inputs. And of course, now we've got supply problems from China as well. So this will eventually affect our economy, right?
Okay, and what do you think, Andrea, about the Fed's decision regarding the rate hike?
So again, let's look at the bigger picture. We had negative rates up until 2018, and they finally raised rates in 2018, and then they got scared for whatever reason. Maybe it was Trump, maybe they saw something going on in the economy. So we stopped raising rates in 2018. In 2019, we had a repo crisis, which everyone's forgotten about. In 2020, we had COVID. So we've already seen rates go up and down, immediately. So now they're trying to raise rates again, but they're also pulling back on the bond buying. And I think more than rates, it's the quantitative tightening that really is pushing everything up, right? So I think the question really is, how high can rates go? And I think they can't go that high. I think they will continue to go up for a little while, but what they don't really want to kill, in my opinion, is the housing. We've got a housing boom that's underway. They want to rein it in. I don't think they want to kill it. So I think it will be one step forward for housing, two steps back, and then that will continue. So I think rates are eventually going to go up. They'll peak sooner than people realize, and then probably begin to fall again, I think.
So Andrea, do you see a recession coming, and how you prepare for it in the USA?
I think, yes, there will be something like a recession. What we are going into, and I wrote a note to clients about 6 months ago. I wrote exactly this. I said, we are barreling into stagflation, and I'm only buying one stock right now. And this is what it is. And I'm not going to announce that on your show. But I basically saw this coming. I saw inflation coming. I saw stagflation coming. And I think what will cause a recession is this stagflation. It's not that people don't have jobs. It's not that people don't have money, but it's all going to be sucked into their housing payments, their gas, and the things that they have to spend money on. And so then that goes away as discretionary spending. People will start, cutting back on their subscriptions to Netflix and all this kind of stuff. And the era of kind of all growth and all revenue and no profit is gone. And there'll be a pivot towards what I'd call real capitalism, which is there'll be a focus on companies that make money, right? And that reliably make money and that can pay dividends. So we're seeing a change in the business cycle. So we might have a small recession or a recession that goes on for a little while, but in that time, you'll also see a shift away from what everyone's been investing in to very different things.
I completely agree with you, Andrea. Thank you. And my next question is, how is the old continent perceived from Washington, from an economic and geopolitical point of view, of course, especially with the Ukrainian conflict?
So I'll caveat this with I'm not a geopolitical analyst. However, so I think, again, there's a few layers to this. I think if you drive around the area I live, which is outside of Washington, D.C., it's in Virginia, you see a lot of Ukrainian flags. So there's obviously a lot of empathy for Ukrainians and what's going on in the Ukraine. So that's one thing. But I think in terms of how we view the continent, I am not your average American, and I'm not your average person from DC. I can tell you, I view Europe very fondly. I think quite a bit. I think there's quite a bit of things that Europe has done right that you really don't get credit for. For example, you've been doing ESG longer and better than we have. We talk about it, but you've actually been living ESG longer and better. You have data privacy and protection, which we do not have in the United States. So you're ahead in that area. You've been doing STEM, you've been training for STEM, those STEM science and math, much longer than we've been focused on it. So Europe actually has a lot going for it. You train people in semi-professional skill areas like plumbing and electricity, and you don't look, as a society, look down on that. Those are really good things. And those things really underpin a lot of society, I think, in a positive way. What the retardant factor in Europe has been Germany. Germany has not wanted to spend money for a long time. And I think what to bring Ukraine and Germany together, I don't think they're going to throw their economy under the bus and just stop Russian oil imports. I absolutely don't believe that will happen. But they will have to spend on defense. They will have to build LNG terminals so they have an alternative to Russia, just to have one. So I think you'll actually see spending coming out of Germany. And I think that, again, over a 10-year cycle will be pretty buoyant for Europe. That's just my take on what I think is going on. What do you think is going on? You're in Europe.
Putin is so serious, so I'm really afraid about World War III. Okay, Andrea, I have a last question. We are in a multi-bubble environment, but the market didn't crash yet. According to you, what are the reasons?
Okay. So we actually don't have a lot of bubbles if you think about it. So really think about this. China wasn't a property bubble. It's not anymore. China's stock market was very buoyant. It's not anymore. Europe really hasn't had a bubble. I mean, respectfully, you guys haven't had anywhere near the stock bubble that we have had. We have had a bubble in a select number of equity in the S&P. The S&P is the S&P 500, really 40 stocks And really, even among those 40 stocks, 10 have had consistently outsized returns. That's where the bubble is. And I would also say crypto. That's a kind of a different topic, but same bubble. That is what you're going to see the end of. But I think as you see the end of that, you will see money shift into other things, right? So it's the end of one cycle and it's the end of one bubble, and it will be the beginning of another, right? So I think that it's crashing now, or it's in the middle of coming off. And I think you'll see the bottom, if we're lucky, at around 3,000. So that's about 25% further down in the S&P. If we're unlucky, you'll see it down to 2,500, right? But then, we start a cycle again, and there'll be new market leaders. So if anyone out there is young and you don't have to sell your equity and you have a job, hang in there and hang on to your holdings, diversify a bit more than you've diversified. Don't expect crypto to bail you out of things, and shore up some cash, shore up a bit of cash over the next few years. Yeah. And then you can get back into the market when it's clear where leadership is going. Okay.
So Andrea, thank you for this interview. Thank you for your time. Thank you for your participation. You are the most welcome on my channel for the future interviews, if you don't mind, of course.
I'd love to.
And I promise I will improve my English level and my English accent.
I can understand you. You sound great.
Thank you. Bye bye.